Good morning, everybody. GM. It's very exciting. So, it's very exciting to meet entrepreneurs and fellow innovators, and of course, people in Hong Kong who recognize the value that blockchain technology and crypto assets bring to this world. So, before we start the topic today, I'd like to invite the audience here, members of the audience, to do a quick survey. By a show of hands, how many of you have personally traded or invested in Bitcoin? Quite a number of you. That's very great. About half of you. So the next question is follow-up question. How many of you have worked in companies that have exposure to Bitcoin? Yes. Also a very sizable amount of the audience. That's wonderful. So whether you're a seasoned trader or new to the crypto world, today's topic will be relevant to all of you. We'll talk about everything from platform security, ETFs, ESG, just some of the key aspects that are crucial for institutional adoption. We're also, of course, here to introduce you to EXOLO, a pioneering platform that integrates crypto into our daily lives. EXOLO is, of course, a proud sponsor for WOW Summit right here in the city of Hong Kong. Now, before we answer the question of whether Bitcoin will cement its status as a global macroeconomic asset, first we must understand Bitcoin's technological history, and then we can take a glimpse into the future. As most of you know, the journey, of course, started in 2009 with the mining of the Genesis block by Satoshi Nakamoto, which marks the birth of Bitcoin. Some of you who are more into the blockchain space may already be familiar with Bitcoin Pizza Day. Since 2010, we celebrate May 22nd because it marks the world's first real-world Bitcoin transaction where a programmer bought 2 pizzas for 10,000 BTC. That's a lot. That's a lot right now, but back then, it wasn't much. This illustrated Bitcoin's potential as a currency as early as 2010. Now, through the years, Bitcoin has significant milestones such as halving events, which keeps Bitcoin inflation resistant. And in 2017, if we move on down the timeline, SegWit upgrade, and which sets the stage for future enhancement, right? And then in 2021, Taproot upgrade, which is a soft fork upgrade that makes it easier for faster and to verify transactions on the network. And this means it makes Bitcoin more efficient and scalable. Now, each of these milestones not only underscores Bitcoin's resilience and adaptability, but also its potential to be solidified as an institutional-grade asset. I believe most of us in the audience already know of the downfall of 4 major players in the crypto world: FTX, Three Arrows Capital, Voyager, and Terraform Labs. And like a domino effect, one after the other, in 2022, these 4 former major players collapsed. FTX, of course, filed for bankruptcy. Voyager couldn't pay back creditors. And the UST and stablecoin Luna lost their peg and crashed, right? All of these things revealed vulnerabilities in operations and governance. And these events, of course, led to significant financial losses for a lot of people, but it also eroded trust in the crypto market. And I think everyone here will agree that we need greater transparency, risk management, and regulatory oversight. So what do we learn? What lessons did we learn from all these high-profile collapses? These crashes fundamentally shook retail and institutional confidence in the crypto space. But on the bright side, the crypto industry also learned some very important lessons. We now call for greater transparency, better security, and risk management practices, and of course, again, clarity for regulatory compliance. It's time to rebuild investor confidence, better protect investors, and adopt measures to prevent similar collapses from happening in the future. And the most important thing, EXOLO is here, aiming to lead by example. And this is how we lead by example. By integrating Merkle trees and proof of reserves, EXOLO not only champions, but also exemplifies heightened security and transparency that we need in the crypto ecosystem. These technologies ensure that users' assets are verifiably safe and accounted for, and this sets a benchmark for trust in digital finance. And only by learning from these events, the crypto ecosystem can evolve to become more resilient and transparent, and like a phoenix, rise from the ashes. Now let's talk a little bit about portfolio allocation as we talk about institutional adoption. In the traditional world, the 60-40 portfolio of equities and bonds has been quite reliable through the years, but however, it's also facing challenges that were unheard of in the past few decades. Diversification reaped lower benefits, diminishing returns, and rising inflation across the world is also urging investors to look beyond traditional assets. And this is when alternative assets, such as cryptocurrencies, come into the spotlight. It's a part of a modern investment strategy. Here's an example. So in 2023, a Fidelity investment survey showed that a significant pivot towards alternative assets such as cryptocurrencies among pension funds and endowments, and they sought to replicate the success stories like Yale University's endowment. What happened is Yale's strategy shift towards alternative assets over the past 3 decades has not only diversified their portfolio, but also significantly enhanced their returns. This goes to show that only just a small allocation through the years of cryptocurrencies within a diversified portfolio can offer opportunities for growth, balance for traditional investment risk. Now, we can all see it. The world is changing fast. As we navigate through financial tides, allocating Bitcoin and other crypto assets is not only beneficial, but almost necessary for achieving long-term growth and stability. Now, here's Gary Gensler, of course, everyone's favorite person in the crypto space. Now, jokes aside, we did mention regulatory clarity, so this is very important. The SEC's approval of the first spot Bitcoin ETFs happened earlier this year in January, in 2024. It marked, of course, a pivotal development in the financial world. This decision served as a catalyst for a surge in interest and investment in Bitcoin, and this propels the ETFs to achieve an astounding US dollars 10 billion in assets under management in under 1 month. And in one day, inflows surged by 1 billion US dollars, a testament to overwhelming demand in the coin. This historic moment not only signifies Bitcoin's acceptance among institutional investors, but this also marks a significant milestone in the journey towards becoming an institutional-grade asset. But because we're here in the city of Hong Kong, the US is not alone in having Bitcoin ETF approvals. As early as 2022, Hong Kong approved 3 crypto futures ETFs, and in January this year, our financial regulator, the SFC, received the city's first spot Bitcoin ETF as well. Now, the emergence of these Bitcoin ETFs is starting to change the way construct their investment portfolios. Experts like Gregory Mall, who you may know as the head of investment solutions at Ameeta Bank, are at the forefront, devising strategies to integrate Bitcoin into diversified portfolios. A recent survey, again, by Fidelity in 2023 revealed a significant trend. Pension funds now allocate 22% of their portfolios to alternative investments, and endowments and foundations even higher at 32%. These figures mean that cryptocurrencies such as Bitcoin are being recognized as viable components of institutional portfolios, and this is challenging the traditional paradigms of asset allocation. Now, when we talk about cryptocurrencies, we are not talking just about Bitcoin. You may know that we are expecting Ethereum ETFs and beyond. This is all very exciting, right? So let's take our attention back to the US. Several firms have already submitted applications for spot Ether ETFs, and this follows the trend of rapid adoption of Bitcoin ETFs. The anticipation surrounding these applications is quite high, as you may already know, and the industry is speculating on how the SEC approval could further elevate cryptocurrencies. Now, approval of, if this happens, Ethereum ETFs would not only validate Ethereum's role alongside Bitcoin, but this also would set a precedent for inclusion of other digital assets in institutional portfolios, marking a new era for diversification and investment strategy. Now, we've been talking quite a lot about diversification, so let's compare Bitcoin with traditional assets, such as silver and gold, or tech giants like Google, Apple, Microsoft. Bitcoin's market cap, as you can see, has soared 1 trillion, showcasing its significant growth potential as a store of value. Now, while it still trails behind gold and silver, this is behind silver right now. This underscores Bitcoin's evolving role in the asset hierarchy, blending the lines between digital and traditional investment realms. Now, next up, when we talk about institutional adoption, this is a very important topic, ESG. Historically speaking, Bitcoin has been criticized for its energy-intensive, proof-of-work mining process. Recent developments paint a more nuanced picture. With more than half of Bitcoin mining now using clean and renewable energy, Bitcoin is making progress towards being more sustainable through the years. Now, this transition not only indicates environmental concerns, but also this aligns with broader ESG goals, offering a blueprint for responsible digital assets management. This might be a controversial take. In the crypto world, we talk a lot about decentralization, but are things that decentralized? When you realize our overall dependency on centralized custodial services, the risk involved in depending on one or two of these custodian services should concern all of us. With a significant number of Bitcoin ETF issuers opting for Coinbase as their custodian, the concentration raises concerns about systematic failures, regulatory repercussions, and heightened security risks. This highlights the need, again, for diversification, even in the custodial services solutions to safeguard our Bitcoin and other digital assets investments. There are two pivotal challenges that institutional investors face when considering Bitcoin as an asset: liquidity and regulatory clarity. Despite its recent surge, right now Bitcoin is above 70K again, it still lacks the depth of traditional assets and poses challenges for institutions that execute large transactions. Now, on the regulatory front, the landscape is, of course, evolving fast, with jurisdictions around the world working to grapple with how to integrate digital assets into existing regulatory frameworks. It must be emphasized that regulatory clarity and market maturity are important for enhancing Bitcoin's institutional appeal. The journey towards institutional adoption of Bitcoin is actually multifaceted. Across the world, again, as we mentioned, various jurisdictions, institutions seeking regulatory clarity and well-defined framework, they need to be compliant. So before there's really clear regulatory rules, we suspect that institutional participation in the crypto space will continue to evolve in the years to come. Now, as we look towards the future, EXOLO stands not only as a participant, but also a vanguard in the crypto revolution. Our roadmap isn't just a plan, but a declaration of our journey ahead, marked by strategic alliances, new features, and a steadfast commitment to you guys, the community. Our features With EXOLO, you're not only trading crypto, you're embracing a future where your financial potential is unlocked, supported by unparalleled security, innovative trading tools, and of course, again, a community that powers ahead together. And really, that's it for me today. Try out the EXOLO platform, meet the team in person, they're right here in the room with you, and explore how we can walk this crypto journey together. Check out our booth right there. That's transparent and bright and pink. You will not miss it. Enjoy the rest of the day. Thank you very much.
Thank you very much, Geoffrey.